This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Spooky month. Stocks suffer their worst monthly performance since January. And the week ahead holds several more catalysts investors need to keep an eye on.
Merger mania. General Electric and Baker Hughes cap off a record month of merger activity. Will the deal making continue, and which sectors might see some action?
And a fortune of frights. How one woman turned her love of Halloween into millions. All that and more on Nightly Business Report for Monday, October 31st.
Good evening, everyone, and welcome, and happy Halloween. Okay, so there haven't been dramatic drops or crashes as in October's past, but the trading month that just ended a couple of hours ago on this Halloween evening has had its share of spooky moments. Plenty enough to send a chill down a random spine or a hair to stand up straight on a sensitive investor's neck. No, the losses weren't ghoulish, but the major average did suffer their worst monthly performances since January, and it could have been worse if banks and some big tech names hadn't held their own and bolstered the performance. And today, oil did fall to a one-month low over uncertainty about an OPEC production cut. As for stocks today, not too scary. The Dow dropping a modest 18 points to 18,142. NASDAQ down nearly a point, and the S&P was off just the slightest fraction.
And now to a deal we told you on Friday might happen. General Electric has agreed to combine its oil and gas business with Baker Hughes and will create a new publicly traded company which will be majority owned by GE. GE shares were essentially flat, but Baker Hughes was down 6%. Morgan Brennan has more on the tie-up.
It's all about energy. The new Baker Hughes will combine the world's largest oil field equipment manufacturer, GE, with the #3 oil field services firm, creating a company with $32 billion in revenue, second only to rival Schlumberger. GE will merge its oil and gas business with the entirety of Baker Hughes, a move that will have the industrial giant owning the majority of the new company, without spending tens of billions of dollars to actually make an acquisition. Baker Hughes shareholders will own the rest, with GE raising more than $7 billion to pay them a one-time special dividend. GE's oil and gas chief Lorenzo Simonelli will run the new entity, which is expected by the middle of next year. CEO Jeff Immelt saying the structure of the deal will have tax advantages and will allow for flexibility around capital allocation.
Let's say the industry remains tough. This is still value accretive to both investors in a tough oil price environment. If the pricing gets better, it allows us to benefit from that as well. It's a very diversified portfolio in terms of short cycle and longer cycle operations. So I think it just gives us a chance to weather the cycle better.
The transaction assumes a, quote, slow recovery in oil, with prices estimated at $45 to $60 a barrel through 2019. The new company will be a one-stop services shop for everything from fracking to power generation, establishing a formidable competitor to other oil field service giants like Schlumberger, National Oilwell Varco, and Halliburton, which had tried unsuccessfully to buy Baker Hughes earlier this year. It also leverages GE's big data push through Internet of Things technology. And analysts say it comes at a time when the broader industry has been engaged in a race to the bottom in terms of pricing.
If not at the exact bottom, we're pretty close. You know, we spent a lot of time listening and reading through some of the earnings calls as of late. We've had 7 quarters of margins getting squeezed. It looks like pricing is starting to hold. You know, we're not seeing meaningful upticks in terms of the prices that OFS can sort of market for their services, but we've certainly not seen them move meaningfully down from this quarter to the last. So. It looks like we're pretty close to that bottom.
The deal could also spark a flurry of consolidation in oil field services as major competitors look to beef up their own offerings with smaller firms that have been squeezed as service prices plunge. Analysts say firms with exposure to the Permian Basin, where energy activity continues, might be attractive, as well as energy companies with manufacturing operations like Oil States International and fracking-related operations such as Superior Energy and RPC. For Nightly Business Report, I'm Morgan Brennan.
CenturyLink will buy Level 3 Communications for $25 billion. Sizable deal here. It expands CenturyLink's fiber optic network and high-speed data service for corporate clients. Also lets CenturyLink better compete with the likes of AT&T and Verizon. Shares of CenturyLink down sharply, off 12.5%, but Level 3 was up nearly 4%.
And Team Health is going private, selling itself to private equity firm Blackstone for a little over $6 billion. The hospital staffing company turned down a $5 billion offer last year from rival AmSurg. Shares of Team Health jumped on the trading session by better than 16%.
And Goldman Sachs reportedly wants Apple to get in on Time Warner. The New York Post says Goldman is nudging, that's banker talk, nudging Apple to make a bid on TW. AT&T has agreed to buy the media company for $85 billion. The biggest deal Apple has ever done so far was in 2014 when it bought Beats, the speaker and headphone company, for $3 billion.
And October has been a record-setting month for M&A deals in the U.S. The value of announced deals are adding up to about $337 billion, surpassing the previous high of $282 billion back in January of 2000. Richard Peterson, a senior director at S&P Global Market Intelligence, joins us now to talk about whether or not this frenzy in M&A is going to continue. Good to see you, Richard. Welcome back.
Hello, Sue. Hello, Tyler.
What do you make of this so far? I mean, we've talked a little bit in the past of why this flurry of activity now, and will it continue?
Well, it's really a continuation of what has been transpiring over the past several years. The fact that this year in 2016, there's been over $1.4 trillion in announced U.S. M&A. That marks the fourth consecutive year of over $1 trillion in deal activity. Last year was a record year, over $2 trillion. And even though there's been a flurry of deals this month, as you accurately said, October has over $300 billion, a record month. We're still down year over year from where we were at this time.
So is it just coincidence that so many of these deals came together in this month?
Well, I think it's some various factors. You know, with Baker Hughes, they had the aborted merger with Halliburton, which was called off by regulatory concerns, whereupon GE stepped in looking for ideas that they could form a partnership. I think with Time Warner and with AT&T, that's a factor of the media consolidation and the desire for AT&T to own the content rather than be just a distributor of the product. I think if you look at these deals, just the two top deals this month, again, the AT&T Time Warner deal and British American Tobacco's $58 billion purchase or announced desire to purchase the remaining stake of Reynolds America. Those two deals account for half the deal value this month.
Absolutely. Does it have anything to do with the fact that interest rates are low, even though the Fed is expected to raise interest rates once this year? You know, the time before the end of the year is getting pretty short. So does that kind of incremental move in interest rates influence big deals? I
think it's very marginal. The fact that you have companies that are awash in cash, that even though corporate profits may be flat for this year, corporate profits are still at elevated levels. I think the companies see their peers make acquisitions, whereupon they're forced to make comparable moves. It's more like a chessboard when there's when rook takes pawn, then bishop wants to take knight, and there's all these variations that go about.
All right, so you just teed up the next question. Where next? Who next? More in energy, finance, healthcare, what, and who might be bought or sold?
Well, it's the usual suspects, that being top sectors this year are consumer discretionary by virtue of media, healthcare, information technology, and real estate, which is actually the reclassified sector which came out of financials earlier this year. I think I look for probably bigger deals in technology going forward. I think in terms of media, there's talk that Comcast may make a move in light of what AT&T did with Time Warner, and I think also again in financials, considering what happens with the election next year, some companies may desire to quickly merge by the balance of this year before the changes happen in 2017.
What does history tell us, if anything at all, about how the market performs the year following a quarter of heavy deal making?
Sure. I mean, there's two ways to look at it. We crunched some numbers at S&P Global Markets Intelligence, and if you look at the top months for M&A activity, the following month tend to be negative. So I'd say the top 5 months, looking at the following month, the average decline was over 2%. Conversely, if you look at the top deals, on average, 1 year period following those top deal announcements, the average gain was 9%. So there's some good news for the Bears and some for the Bulls.
Thank you, Richard. Appreciate it. Richard Peterson of S&P Global Market Intelligence.
Well, October is finished, and as Bill Belichick might say, it's on to November. And the first 10 days could be nothing short of a Super Bowl of big data and even bigger decisions. Bob Pisani has more.
Wall Street is keeping an eye on a handful of key catalysts this week, starting with the election. The market's pricing in a Clinton victory with the House remaining Republican, so any evidence to the contrary could shake things up. Already for the month, we've seen healthcare stocks like Cardinal Health and McKesson down big time thanks to drug pricing concerns. It's going to be another busy earnings week ahead with names like Sony and Pfizer, and Facebook and Alibaba all reporting in the next few days. We've ended the earnings recession for now. That's the good news, but we're still waiting on 200 more companies to report results. The Federal Reserve kicks off its two-day meeting on interest rates tomorrow, and the markets are widely expecting them to signal a rate hike in December. But no major surprises expected when both the Bank of Japan and Bank of England meet later this week. Finally, any clues from the widely watched October jobs report on Friday will help solidify expectations for the Fed even further. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Another thing the market is intently watching, anything coming out of the FBI's investigation into new emails related to Hillary Clinton's private server. Eamon Javers is on the case. What can you tell us, Eamon?
Yeah, hi, Tyler. Well, what we know as of this evening is that FBI officials are very carefully going through the new emails that they've obtained now that they have a warrant in place to search them. They're using a software program that sorts out any emails that were previously turned over to the FBI as part of the investigation and looking for anything that might not have been turned over. If they find any of that, they'll look through it and try to figure out whether or not there's any classified information in there as part of this Clinton probe. We're also learning a little bit of context here about FBI Director James Comey's decision-making to release this information before the election. I'm told by a former FBI official that this is an extraordinary decision for Comey to take, in particular because earlier this year when the FBI and U.S. intelligence agencies were discussing whether or not to name Russia as a state entity that was trying to meddle in U.S. elections, Comey argued internally and privately that it should not be done publicly because it was getting too close to the election. So my source saying that that's extraordinary given that he ultimately made the decision to go forward with the Clinton emails on Friday, guys.
How fast, though, can they look at these as we edge ever closer to the election? Have they made any comment on the speed with which they can investigate?
The FBI is saying nothing public about this. It's not even clear that Director Comey will come out and say anything publicly between now and the election. But I talked to a former FBI official today who said that technologically they can do this in days and have what the source called a preliminary read on these emails and have at least a preliminary indication of what's in there. But whether they will release that preliminary indication to the public between now and Election Day is really anybody's guess at this point. One official telling me that we are in uncharted territory here. This has simply never happened before at the FBI.
Do we have a quick count of how many emails they're looking at?
Well, we think that the total universe is 650,000. That might be a meaningless number, though, because there's so many duplicates in there, attachments and spam and other things. But the subset that would apply here would be much, much smaller than that, Tyler.
All right. Eamon, thank you very much. Eamon Javers in Washington.
And straight ahead, why the newest trend in what women are buying is great news for the housing industry.
Consumer spending rose more than expected last month. Spending did rise 0.5% in September, 0.1% more than estimates. The increase was due in part to the public buying more automobiles. Personal income also inched higher, but by less than expected. However, Americans did save less last month, amassing nearly $800 billion, down from $820 billion in August.
Investors and companies are increasingly looking for business models that revolve around services. Being dubbed the subscription economy, analysts are looking at the success of Amazon's Prime service and calling for other companies to follow suit. Mike Santoli takes a look at what subscription bundling means for investors and where the benefits and pitfalls may lie.
One of the hottest business and investing trends is a very old idea: subscriptions. Amazon's huge success with its $99 a year Prime service has CEOs and investors chasing similar business models. Software maker Adobe Systems has turned to a cloud subscription format in recent years. Its shares have doubled since 2013, and most other old tech giants are trying to follow the same path. AT&T's planned purchase of Time Warner is also a bid for a better subscription bundle of wireless service and entertainment, and a more durable connection with customers. All this has led analysts to propose Apple Prime, a package of an iPhone, iTunes, and Apple TV as a fix for flattening smartphone sales. One media consultant has even floated Disney as a service, or pay one price access to Disney's entire TV and entertainment output, plus theme park discounts. So what's behind all this? Subscription fees mean steady revenues and a sticky relationship directly with customers. With consumers' attention so fragmented in the social media age, the cost of locating and acquiring customers has gone up far faster than the more predictable expense of delivering a product or service. Even many less virtual companies are being viewed through the prism of subscriptions. Starbucks and Dunkin' brands have pushed sophisticated rewards programs that almost make subscribers out of their customers, for instance. As with any Wall Street trend, there's a risk this idea will be misapplied to some companies and taken too far by others. For now, though, expect to hear more CEOs touting the virtues of subscriptions. For Nightly Business Report, I'm Mike Santoli at the New York Stock Exchange.
Nike gets hit on a stock downgrade, and that is where we begin tonight's market focus. Bank of America Merrill Lynch cut the Dow Components rating to underperform, which is essentially a sell down from neutral, citing an increase in competition from companies like Adidas and Under Armour. The bank also slashed its price target on Nike to $46, down from $55, saying it's not convinced Nike has innovative products in its pipeline. Shares were off 3.5% to $50.18. Cost cuts helped energy firm Williams Company turn a profit in the latest quarter, with the results exceeding estimates. The company also said its revenue grew. Even so, Williams shares finished the day down more than 1.5% at $29.20. The power supplier Southern Company topped analyst profit expectations thanks to higher retail revenue and strong performance in a company subsidiary. Southern Company also saw its revenue rise. Shares rose 87 cents to $51.57.
Pharmaceutical distributor Cardinal Health said drug pricing pressures caused profit to fall, but still the results managed to surpass estimates. The company also posted higher than expected sales. However, Cardinal cut its earnings outlook for the year, citing short-term headwinds in the pharmaceutical business. Shares nonetheless rose 2% to $68.69. Xerox says it has reached a settlement with its largest individual shareholder, who we told you sued the copier maker last month, alleging the company's planned spinoff violated an existing contract agreement. Under the settlement, Darwin Dason will be given 300,000 shares, in the company's two businesses. Shares fell marginally to $9.77. And network equipment maker Brocade may be interested in selling itself. As first reported by Bloomberg, the company is in advanced talks and close to entering the final stages of a sale process. The potential deal, which could be reached as early as this week, has attracted interest from chip maker Broadcom. Shares soared almost 22% to $10.60. And Valiant Pharmaceuticals isn't out of the woods quite yet. Bloomberg said the drug maker's former CEO and CFO are being investigated by authorities regarding potential accounting fraud. The report added the investigation could lead to charges within weeks. Valiant said it had previously disclosed that investigation. Valiant shares tanked more than 12% on the news to $17.84.
Wells Fargo will pay $50 million to settle a lawsuit accusing the bank of overcharging hundreds of thousands of homeowners for appraisals that were ordered after they defaulted on their mortgages. The settlement would resolve claims that Wells Fargo charged more than it paid for third-party appraisals. Mortgage agreements do let banks charge homeowners who default on their loans for those appraisals, but the lawsuit says Wells charged up to $125 when their actual cost was $50 or even less.
Traditionally, males and married couples have been the main buyers of homes, but now single women are becoming homeowners more than men. In fact, this year, females have bought twice as much as their male counterparts. Diana Olick has more on this new trend in housing.
Adrienne Nassau just closed on this 3-bedroom home in Maryland. It's a fixer-upper, but she's looking forward to the project.
I actually think I'm simplifying my life.
Nassau, widowed now 15 years, sold her large family home on the Eastern Shore and intends to sell the condo she's living in now in nearby Bethesda. Even in her retirement, she still thinks ownership is worth it.
I think when you own, you can do with the house whatever you want. You can make it your own. You can make whatever improvements you feel comfortable with.
Nassau is one of a growing share of single women in the housing market. They now make up 17% of home buyers, more than twice the share of single men. This despite the fact that women still earn less than men for the same jobs.
There are women in the workplace who earn good money, who are professionals, and who are independent in their thinking and feel that they're able to cope with taking on a house.
In the past, women had a harder time getting mortgages on their own and often had to have someone else co-sign the loan. That discrimination is gone today, but men do tend to have higher credit scores than women, likely because men make more money. After living with her daughters for a while and then renting for a year, 68-year-old Barbara Janai just bought a condo in an age-restricted community using part of her retirement savings and a reverse mortgage.
Instead of $1,400, I'm paying $400 a month. And that's all I'll have to pay for as long as I live in this condo.
Janai still works full-time as a teacher, but her salary was barely covering the rent. By buying in the same building where she was renting, Janai not only saves money, but has something to show for it.
For me, this is the first time that I've ever owned in America in my life. So I walk in every day, I say, hello, beautiful home, it's mine.
A greeting more and more women are now embracing, all on their own. For Nightly Business Report, I'm Diana Olick in Chevy Chase, Maryland.
Coming up, how giving people a good scare has turned into good business. That's next. Here's what to watch tomorrow, folks. As we mentioned earlier, the Federal Reserve begins its two-day policy meeting where it will decide whether or not to raise interest rates. We get a look at the manufacturing sector when the Institute for Supply Management releases its October index, and the Dow component Pfizer will post its latest quarterly results. And that is what to watch Tuesday.
And finally tonight, who wouldn't want a job they love? Well, one media pro took her fascination with Halloween to a whole new level, quitting her day job to make millions in the horror space. Kate Rogers bravely takes us to Randall's Island, New York.
For some people, being terrified is actually fun. And Melissa Carbone is cashing in.
Fear is America's favorite drug, like 100%. Fear is actually a real physical reaction, right?
Oh, I know. Yes,
yeah.
I know.
So, yeah.
Oh, I'm actually shaking. This is a dead end. Are you kidding me? The founder of 1031 Productions always loved Halloween, but it wasn't until she began decorating her own home in Los Angeles years ago that it hit her. There might be a real business behind scaring people.
I didn't realize that it was such a thing for me. Trick-or-treating and handing out candy wasn't enough, and then I wanted to start decorating, and then that wasn't enough. It kept building for me, and then I realized how much I loved the genre.
At the time, she was working in marketing at Clear Channel Worldwide. She and her co-founder, Allison Richards, began saving and plotting for an immersive, large-scale haunted hayride. They drained their life savings and raised $500,000 from friends and family, as well as their sponsor, Mini Cooper, to launch in LA in 2009.
I feel like we have pioneered a whole new industry.
They're not going to get too close to me, right?
See, not bad. They're cute.
1031 broke even their first year and continued to grow. This is their second year hosting the New York Haunted Hayride on Randall's Island. The company now has 8 attractions from February through November in New York and California, raking in $3 million last year and securing a $2 million investment from Mark Cuban on Shark Tank and another undisclosed investment from Live Nation along the way.
I get to make a living by building and creating these environments that people typically would not get to experience, that people can remember physically and not necessarily mentally.
Hayride attendees will experience a storyline that's a full year in the making with more than 100 live actors. Between New York and Los Angeles, about 130,000 people will attend the event this year. The scariest part, the blackout maze, even in the daytime. For Nightly Business Report, I'm Kate Rogers, trying to escape from Randall's Island, New York.
She just took the emergency. She's never going to be the same.
Kate doesn't scare easily.
No,
either.
she doesn't, but that was the emergency exit. She went out. That does it for Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us.
I'm Tyler Mathisen. Thanks for me as well. Have a great evening, everybody. Happy Halloween. We'll see you tomorrow.